The cryptocurrency's bumpy ride continues after investors began trading the first U.S. Bitcoin futures exchange-traded fund on October 22nd, surpassing other ETF launches. Hey people, welcome back to our channel, Crypto Master Guide, your ultimate guide to becoming the next crypto millionaire. Before we dive into today's video, make sure to hit the subscribe button and turn on the notification bell. Let us get started. According to some financial commentators, this launch will be a significant thing, driving the price up to $100,000 and beyond by giving institutional investors the confidence and security to invest in Bitcoin. Marcus DeMaria, chief executive of Investment Mastery, says, "This has opened the gates for some of the world's biggest investors to get into crypto safely, and more are likely to follow." Nigel Frith, lead analyst at bitcoinmoney.net, expects more funds to follow. "There has already been a rush for new futures ETFs, and I only see that continuing in the short term. As of now, the optimists have been proven correct. Rather than buying or selling Bitcoin directly, these funds invest in Bitcoin futures contracts, which are agreements to buy or sell the commodity at a later date for a predetermined price. The new products allow users to trade cryptocurrencies through ordinary investing accounts, avoiding the bother and security issues associated with cryptocurrency exchanges." BITO. The ProShares Bitcoin Strategy ETF, ticker BITO, had one of the most successful opening days in the history of ETFs, bringing in $550 million from crypto enthusiasts. According to Morningstar, more than $1.01 billion worth of stock changed hands. Furthermore, according to Coinmetrics, the price of Bitcoin increased by more than 4% to $64,206.51 and rocketed to an all-time high of $66,900, surpassing the previous intraday record of $64,899 set in mid-April. For nearly a decade, companies have been trying to be the first to launch a Bitcoin ETF in the United States. The ProShares Bitcoin Strategy ETF, which began trading on the New York Stock Exchange under the ticker BITO, generated about $1 billion in trades, making it the third largest ETF launch in history. The ETF had risen 4.8% to $41.94 by the conclusion of the day. Although it is not the first Bitcoin ETF, it is the first in the United States. In Europe, Nasdaq's Nordic exchange introduced the XBT Bitcoin Tracker in 2015, while the Purpose Bitcoin ETF debuted on the Toronto Stock Exchange in February. Rather than waiting for the Securities and Exchange Commission's approval, some U.S. investors have exploited these to obtain exposure to Bitcoin. SEC's reaction. The SEC has been slow to embrace Bitcoin, citing concerns about a lack of regulation as well as the possibility of market manipulation and fraud. According to Stephen McKeon, associate professor of finance at the University of Oregon in Eugene and partner at Collab Plus Currency, a cryptocurrency-focused investment fund, most Bitcoin ETF applications have previously been based on so-called spot markets or investing in the currency directly. In August, though, SEC Chairman Gary Gensler said that the agency would be more amenable to a futures-backed Bitcoin ETF under the Investment Company Act of 1940, which oversees mutual funds and may provide substantial investor protection. Regulators may offer some investor protection, Gensler said on CNBC's Squawk on the Street, because the Commodity Futures Trading Commission oversees U.S. Bitcoin futures and the ETF wrapper falls under the SEC's jurisdiction. He cautioned, though, that it is still a very speculative asset class. While the SEC is likely to issue a few more Bitcoin futures ETFs, it's unclear whether or when the agency would approve an ETF that invests in Bitcoin itself. While Bitcoin futures ETFs have sparked a lot of interest, many experts recommend taking the time to understand more about the products before investing. Despite the fact that the funds have a high connection with Bitcoin, the asset will not reflect the currency's value because it tracks the price of futures contracts, which can be volatile. There may be a role for it, but if it becomes a major part of someone's portfolio, it may be very risky, he noted. A modest bit of dabbling, on the other hand, may not be a problem after retirement, and other financial goals are on track, according to some counselors. However, as more crypto-based products become available, investors may soon be faced with a bewildering assortment of investment options. According to Anthony Portnow, founder of Traders of Crypto, the ETF is based on futures and will not immediately raise demand for Bitcoin. Instead, it may astound everyone by turning bearish. The price of Bitcoin plummeted after futures were published on the Chicago Mercantile Exchange in 2017, allowing speculators to short sell the cryptocurrency. What does this mean for Bitcoin? It's tough to pinpoint a single cause for price movements in the crypto market. Many factors influence the industry, ranging from legislative changes to technology advancements to the passage of time. However, it's difficult to ignore the fact that the news regarding the ETF has had a substantial impact on Bitcoin's recent price movement. Bitcoin's price rose by 27% in October and is close to all-time highs. BITO was the first cryptocurrency exchange-traded fund, or ETF, but it is unlikely to be the last. You should expect Bitwise and other crypto asset managers to try to pry the door open even more now that it's cracked open. Long way ahead. The industry, on the other hand, will get there in the long run. Crypto has been making its way from the outskirts of banking to the mainstream over the past decade. We're making progress, but there's still a long way to go. With that being said, it is important to know that all investments come with a risk, so do not invest the money that you can't lose. If you enjoyed the video, make sure to hit the like button and stay tuned for more interesting videos. Bye!